The Nasdaq sinking nearly 5% today as big tech continues to get beaten down. But is there more pain to come? Let's bring in the Chartmaster, Carter Worth of Worth Charting. Carter, what do you think?
Well, it's what do we say? It's pretty unhappy. I think we'd all agree on that. Before we look at the charts, I mean, we know that the broadest aggregate we have, right, the Russell 3000, which represents 98% of the investable capital in the United States, is down only 20%, a little bit more. But basically, you're talking about half the stocks in the index have lost 35% or more. So it's been going on for a while. Hard to know where it ends. Let's try to figure it out. Let's look at a chart or two. First, the Nasdaq, which is the leading light. Remember, the Nasdaq 100 index completed 13 consecutive years of positive total return at the end of last year. No index has ever done it. And this year is the year that record will end, to be sure. So what do we have? A perfect head and shoulders top. No other way to draw the lines. Look at the second chart. We have retraced exactly, and these things don't have to be this exact, but sometimes they are, 50% of the move from the lows of COVID. Does it have to stop at 50%? No. Could it be 52? Let's look at where it might stop. Third chart. So that first line there is the 50% retracement. And were you to sink further into support or go all the way down, the lower line is the high to the penny before COVID hit. The midpoint is 1080. That would be another sort of 7 to 10% down from here. And why not? It's anybody's guess, but I think the important thing is every indications are that there's more to come.
More to come. Mm-hmm.
Yeah. Yep.
I definitely want to ask you, before we run out of time, Carter, about Walmart and Target and the damage being done to retail and whether you think that damage could be contained at this point.
Well, we have some charts here for those too, but the main thing to say is that when you get reset like that, it's one thing to go down in an orderly way. When you have a drop in gap, right? It's just like when you get a heavy volume upthrust in gap, you've been re-rated because of an earnings beat or FDA approval or you're being bought out. When you drop in gap on volume that's 8 and 10-fold, the worst day for each of those two stocks since 1987, you don't recover from that quickly. And then there's this, and this is the most important thing. The lowest beta stocks in the market were hit the hardest. You're talking about, Campbell's Soup and Mondelez and Schmucker's Jelly. These stocks with betas of basically half the market were down 7, 8, 9% today. So think about that. If your beta is 0.5, in principle, you go down or up half of the market. So you go up less than the market, or when it's up and you go down less. So low beta names crushed. There's an old expression, everyone knows it, they get to the generals last. It used to be General Motors, General Mills, General Electric, and these very defensive names. Ultimately, I would think this selling is over when they get around to energy.
Carter, thank you. Carter Braxton Worth of Worth Charting. General Mills, I'll go to you. They're coming for you.
Yeah, it looks that way. And I don't know, maybe it's some evidence of indiscriminate selling when some of the low beta stuff gets sold as well. So maybe that's a silver lining. I think looking at Apple is very interesting. We're talking about the NASDAQ, the Qs, Apple being the biggest part of that. So very, very quick math here. Before Apple broke down, it was trading at 25 times. The average over the last 10 years is 16 times. Let's say it gives back half of that. So that would mean Apple's trading at 20 times forward. That's $128 or 10% down from here. The question is, all we've seen right now is multiple compression. If earnings start to get hit, that denominator shrinks, then the price needs to come down even more to maintain that 20 times multiple. So could it be 10 times? Could it be 15 times? Sure. It's just trying to help us get oriented in this sea of confusion at the moment. But I think that's a reasonable way to think about it. Carter looked at the technicals. Those are some of the fundamentals.